Greetings. Welcome to my weekend market recap, 19th November 2022. I'm Sagar Nandi, retired IT professional, swing trading stocks using the Q systems and techniques that I develop. You may contact me using my email ID info@superiorprofit.co. I regularly share live market and stock analysis on my website superiorprofit.co, Twitter handle superiorprofit, and YouTube channel Trading Profitably. All these are open to the public and you are most welcome to make use of them. Disclaimer, this demonstration is for educational purposes only. I am not an investment advisor. It is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. Options trading can be risky. You may refer to the characteristics and risks of standardized options document from Options Clearing Corporation to decide if option trading is suitable for you. I use the Q systems in my trading. They run on the Metastock platform and the technical analysis component runs on TradeStation as well. That was the last slide. Let's continue with the live systems, starting with a look at the global markets. First, Australia's All Ordinaries. In the daily, the All Ordinaries is in an uptrend. In the weekly, it is going up. However, this week had a bearish indecision at the top. In the daily, this week price did not move much. It is above the upper boundary level and the stretch band indicator is showing that it is overbought for many days. What is my conclusion? The market is in an uptrend, but it is overbought. Therefore, I am not going to buy. There is no short signal. I am not going to short. So uptrending and no preferred trading direction. Next, Japan Stopics Index. If you remember my last market recap, at that time the weekly came here right near the trendline resistance. Price was moving sideways bound by trendline support and resistance, and in the sideways range it was at the upper edge. Price was going up. So my conclusion in the previous market recap was uptrending in the daily chart but at the upper edge of the sideways range. Therefore, my preferred trading direction would be short, not long. That was useful. This week on Monday, it displayed the bearish headwind possible reversal signal. Price came down from the trendline resistance in both daily and weekly. And for the week, it didn't go anywhere. Tried to recover somewhat. On Friday, once again, tilted down from the trendline resistance. What is the market condition? Range bound at the upper edge of the range. So my preferred trading direction could be short. However, not so in this case because I see there is a trend line support nearby. Even if price comes down, I will not have an attractive reward risk ratio trade. Therefore, my final conclusion is sideways range and no preferred trading direction. I'll have to see price breaking out of the triangle pattern, and then depending on the direction of the breakout, I will choose my next trade. So far, two global markets, and I am not having any preferred trading direction. Let's look at the third one, China's CSI 300 index. What is the market condition inside a triangle? I will have to wait for it to break out in either direction and then decide my next trade. If it breaks to the upside, it may come close to the next trend line resistance. If that is broken, it may come close to the y direction line, and then there is another trend line resistance. So on the upside, it will not be easy for me to decide on taking long trades. Whereas if the trend line support is broken, there is no other trend line support nearby, then it will be easier for me to find low risk shorting opportunities. Currently, I have no preferred trading direction inside a triangle, but I will be happier for swing trading purposes if price can break below the trend line support rather than breaking above the trend line resistance. That is how I may anticipate a market move, identify some potential trades by drilling down into the constituent stocks, into the Chinese industries as well, get ready with a number of short watch list stocks, number of short candidates, and execute the trade only if the market moves downward. 3 out of 3 global markets, no preferred trading direction. Next is India's Nifty 50, the strongest of all the major markets we study. In the previous recap, we were here and I commented that it was likely to go up and hit the previous all-time high. It hasn't hit that yet. Price in fact came down very slightly. You may see that from the candle pattern. I know price came down this week because the activity bar is in red color. In the daily on Monday, we had a bearish headwind. Then we have two bearish indecision in a row. Looking at that and the fact that price is already above upper boundary, I'm not going to take new long trades. Will I take any short trade? No, there is no short trade setup. What will make me happier for swing trading purposes? That will be if, let me redraw the lines. That is going to be if price can break above the previous all-time high where a bearish headwind had come earlier and then immediately reverses below the same watermark resistance created by the earlier bearish headwind, thereby creating a bearish false upside breakout. Then I will be happy to look for short candidates, probably in stocks that are at a high price level right now. Currently, I have no preferred trading direction. So 4 out of 4 markets, no preferred trading direction. Let's look at the last global market we study, UK's FTSE index. If we look at the longer term weekly chart, then it is inside a box. It is near the upper edge of the box. We still have some distance to go. It will hit the upper edge of the box when daily price will come to the trend line resistances. If that happens, and price reverses from one of the many trend line resistances we have in daily, then I'll be happy to look for short trades. This week you can see many of the candles had an upper tail. That shows price tried to go up but sellers stepped in. It is probably getting ready for a short setup, but again I'll be happier if it can go to the trend line resistance, probably even create a false upside breakout and tilts down from there. Currently no preferred trading direction. So all the global markets I am not able to decide on a preferred trading direction. Let's look at the state of the global index, not that one, global custom index. This week price did not go anywhere. We have one bearish indecision, one bearish headwind, one bear release signal. Price is at upper boundary, nearing high jump. So I'm not going to be bullish on this global index looking at all the patterns. Am I going to be bearish? No, because it is in an uptrend and there is a trend line support. For me to be bearish, price has to decisively close below the trend line support first. That has not happened yet. So the global index is also indecisive for swing trading purposes. What about the USA market? In the last market recap, I suggested not buying. Why? Because the bucket analysis was showing overbought condition. Let's look at the bucket first. In the last market recap, we saw that the percentage of stocks in the uppermost bucket greater than 10, that represents the stocks above upper Bollinger Band, very overbought. That percentage was here, 30% level. And anything around 30-40% level in this bucket analysis is overbought condition. And I don't like to buy when the market is overbought. Individual stocks may not be overbought. Of course, not all stocks would be overbought, but market carries the most importance in deciding whether I'm going to trade and in which direction I'm going to trade. If the market is bullish, I like to buy, but not if the market is overbought, which was true last weekend. And I explicitly mentioned because of the bucket analysis, I was not going to buy. And see what happened after that. From the percentage of stocks above upper Bollinger Band at 30%, now it has come down to only 2.8%. So let's say about 27% stocks came down below the upper Bollinger Band. Some of them might have given short setup, maybe short setups that come at the very high price level. For example, bearish headwind at price extreme high. You could find those candidates using QFinder. Last week's analysis was appropriate. Not buying stocks was useful because market did not go up. Now it is not overbought anymore. Is it bullish? Yes, it is still bullish because 77%, more than 50% of stocks, almost 80% in fact, are above the mid Bollinger Band. On Friday, 9 sectors went up. Interestingly, the best performer was utilities. I'm doing this live and I'm noticing the second best performer was real estate. Both of them are defensive sectors. So Friday was bullish, but the best performers were defensive sectors. That is something to keep note of. How is the sector industry stock breadth as seen from sector industry stock advance decline over 1 month to 1 day. Longer term period, that is 1 month and 10 day, they are bullish. Medium term, 5 day, that is this week, is bearish, and then 2 day, 1 day, the shorter term period is bullish. So that is a nice picture to have to look for bullish trends. Longer term bullish, dipped in the middle, gaining strength again. That picture allows us to buy. And we saw that bucket analysis is also not overbought but bullish. So that allows us to buy. QH is telling us that it is okay for us to buy. But what about the market ETFs, the external view? Let's start with SPY, and I'm now using Q Elite on TradeStation. S&P 500, the weekly candle is very indecisive. Price came down slightly. In the daily, it is inside a triangle. Right near the middle of the triangle, that is a no trading area. So the external view of SPY is telling that there is no preferred trading direction. Nasdaq ETF QQQ, the weekly candle is indecisive. Price came down this week. Isn't it nice that last week, look at this very bullish candle of QQQ last week. Still, I decided not to buy. I shared that explicitly before knowing the result, and that was useful because price slightly came down for QQQ for SPY. In daily, QQQ is also inside a range, right in the middle of the range, no trading area, so I have no preferred trading direction. DIA, bearish indecision at the top. Here also price came down little bit for the week. Series of bearish indecision at the top, very close to upper boundary. Both jump and thrust are approaching extreme high level. DIA in fact is the strongest of the four market ETFs, but it is reaching extreme overbought condition. I'm not going to buy. And lastly, IWM. Well, last week in the market recap, I showed that it was right at trendline resistance. And that was a point not to buy, clearly. That was effective. It came down the most of the four market ETFs. Activity bar is also showing that. However, the weekly candle is indecisive. Daily is inside a triangle pattern. We have series of bearish indecision and then bearish headwind. As of Friday's close, it is looking indecisive. So let's step back. Global markets are indecisive. Q edge is showing as far as sector industry stock breadth and bucket analysis are concerned, we are allowed to buy. But the market external view, another important aspect of deciding preferred trading direction, is very indecisive from all the four market ETFs. What about technical breadth? Balance between bears and bulls. First, using the weekly interval, all signals bearish, strength signal slightly bullish, balanced, trend continuation balanced, reversal bearish. Overall, it is bearish. So the weekly is not telling us to buy. And we saw in Q edge also the weekly period was bearish. However, 1 day, 2 day periods were bullish, that allowed us to buy. The weekly period in Finder is also bearish, that is in sync with Q edge. What about Friday? Friday is in fact bullish. This is bullish versus bearish signals, daily interval, Friday. 80% of all signals were bullish. Strength very bullish, 94%. Trend continuation also bullish, 69%. Only reversal, 66% bearish, more bearish than bullish. However, the reversals in absolute number are much lower than the strength signals. So here strength and reversal taken together is going to be marked as bullish. So we have overall bullish picture on Friday that allows us to buy. Now one comment I made earlier that the market level is the most important factor. Individual stocks may be giving a buy setup, I don't know, we can try to find out. But the market level, SPY, QQQ, IWM, they are not letting me buy. So again this week, I'll step aside. For the sake of applying Q systems, I may look at some stocks like I did in the previous recap, but I have no preferred trading direction and therefore I'm not going to buy this week as of now, just like I didn't buy any stock last week as well. Is our market analysis complete? No, we didn't look at a very important aspect, that is the market internal. Single chart view, very powerful. Market breadth total view. In the previous recap, I showed that the percentage of stocks above 50 MA, the yellow line, was nearing the overbought level. It's still around the same level, didn't move much, very close to being overbought from where we expect a pullback, but didn't hit that level yet. 3-month new high low was very close to overbought, didn't quite hit that, pulled back little bit. There is no clear signal from this chart. Friday's candle shape is indecisive for this composite index, total view index. What is in favor? Small cap versus large cap is tilting down. So large cap is doing better than small cap. What about growth versus value? That is tilting down for longer period, and for last couple of days you may say flat or slightly tilting down. So growth is not doing well. Many traders like to trade small cap growth, but neither small cap is in favor nor growth is in favor. So high growth stock traders may be aware of that and may stand aside. What is stronger, NYSE or Nasdaq? Let's look at that, drill down into market breadth. Let's look at the yellow line, percentage of stocks above 50 MA. For Nasdaq, it is right at 50% level. For NYSE, it is at 70% level. So Nasdaq is much weaker than NYSE. NYSE stocks are approaching the overbought level. For Nasdaq, there is still a long way to go. What all this means is that if next week market turns bullish, then I may be happier to take Nasdaq stocks because it has still a long way to go before it becomes overbought. That may be easier. That means it may be easier to find technology stocks to buy if the market goes up next week. As of now, I have no preferred trading direction. The market internal health using this market breadth charts is also not giving me any clarity. So I'll stand aside. What about mega caps? I look at two different mega cap charts. One is mega cap custom index. This is not only technology mega caps, this is all mega caps, top 20 mega caps in the USA market. It is inside a triangle, and you can see this week is very indecisive. We have 3 bearish indecision in 4 days. However, there are multiple trend line support, so I'm not going to short. There are multiple trend line resistances. I'm not going to buy. I have to wait to see which direction it breaks out before trying to buy or short mega caps in general. And if you wanted to look at mega cap technology stocks only, we can look at another custom index that I created. And I tweeted about this technology custom index a few days earlier. Let's look at that. You will see from this tweet also how I am using the Q analysis on live market, sharing them before knowing the results and how they are turning out. This was before the market open on November 16, 9:25 a.m. Eastern Standard Time. I shared the USA mega cap tech stock at a glance view. Weekly was right at trendline resistance. Daily was also right at trendline resistance. Looking at that, as of November 15th close, I hypothesized that it would not be good to buy. Instead, you could look for shorting opportunities if price came down. How did this mega cap tech index play out after that? I followed up with another tweet that was November 18th after market close. I first shared my analysis on this day, and since then price had come down. The daily traffic light color, bullish or bearish momentum color, changed from green to red. In the weekly, we can see that the candle shape turned bearish. You could probably look for some shorting opportunities in mega caps based on my initial tweet. If daily interval did not give any short setup, you could look for short setups using intraday precise entry chart. Let's look at the weekly daily of the same mega cap tech index as of Friday's close. Well, that's the one that I tweeted. It's not allowing me to buy. Instead, if price comes down, I may continue to look for shorts. And if you shorted right at the top at trendline resistance, you may continue to hold those stocks. The mega cap tech index as a whole is underperforming the market. Earlier in this area, it was outperforming. So mega caps are changing their character. When will I be ready to buy mega caps again? If all these 3 trendline resistances here are broken, at which point I will need all these trendline resistance in weekly also to be broken. Only after that I look to buy mega cap tech stocks again. So mega cap techs are also not allowing me to buy. That's why I will prefer to stand aside. I have some time, so again, just like last week, I'm going to look at some stocks, and let me do it in a different way. We could do top down, we could do bottom up using Q Finder or Q Edge, but let's do another thing. In Q Global, there are a number of scans, Q scans. The Q Finder scans are used to populate the Q Finder tool that helps you and me visualize the technical breadth and do multidimensional analysis. Very powerful. If you are in a hurry and you are analyzing the stocks just before market close, and remember Q techniques allow us to trade before the market close. We don't have to wait for the next day to confirm a signal or setup. So it is quite common for many Q traders and certainly for me that I run the scans maybe 15-20 minutes before the market close and then use the Q tools to carry out a complete 360 degrees analysis to find optimal long or short trades. And if I am having less time, maybe 5-10 minutes only are left before the market close, sometimes instead of running Q Finder, I may run these two scans. Rather one scan. If I am bullish, I am going to run the find all long setup scan. If I am bearish, I am going to run the find all short setup scan. And if you are only a breakout trader, then you may narrow down even further, run only the long breakout, and if you scroll down there is another short breakout. Depending on preferred trading direction, you may run one of the trade setups of your interest. If you are interested in all kinds of trade setups, that is trend following, trend reversal, pulling back, exhaustion, sideways, breakout, then you run this long or short all setup scans. If you want to visualize the market breadth, you run the Q Finder. I prefer using Q Finder, but let's look at the long all setups today. Why I am looking at long? Because remember QH told us we can buy. Q Finder also, let's look back. Q Finder Friday's picture also tells us we could buy. Only reason I am not willing to buy is because the market internal and external views are indecisive. So I'm not going to actually buy any stock right now, but for the sake of demonstrating the long all short all scans, let's look at the result of the long all setup. This is how the report looks. The instrument name and symbol are here, and then the different Q trade setups: breakout, pullback, trend following flow, bounce, headwind reversal, and box sideways setups. You will find a 1 if a possible setup is there, 0 if there is no trade setup. Let's look at the breakouts. All the rows that have 1, I selected the first row and then shift clicked on the last row with 1 under the breakout column. So these are all having breakouts. I could open them using charts, but as you know, I don't like to buy only based on technicals, because using a few more clicks I can find the strong fundamental stocks in this list and that are in strong industries as well. So I'm going to carry out that 360 degrees analysis. I'm clicking copy, right click copy, not copy all. That will select all the stocks here, but I am interested to look at breakouts first. Let's say that. So copy the breakout stocks. Now I'm going to carry out a fundamental analysis first using QVital. I cleared the QVital stocks. There is this QFinder import button. I'm going to click that. It's going to get those stocks, 40 stocks, as you may see here. 40 stocks had 40 stocks had possible breakout setups. So I'm carrying out a fundamental analysis. That is done. Let's look at the scorecard. I'm going to look at least 1-star bullish stocks. That's either value stocks or growth stocks. So I click that green 1-star button. I'm left with 23 stocks. So we had 20, sorry, not 20, we had 40 stocks that had breakout setups, and 23 of them are either value stocks or are having high growth in the last quarter. 1-star bullish candidates. Am I going to look at these 23 stocks charts? No. I want to see which of these stocks industries are strong. So I'm going to look up their industry scorecard from QEdge by clicking this look up industry scorecard button. Sort by 1-day performance. I'm going to highlight only the industries that are among top 20% by strength on Friday, this column, or top 20% in strength by acceleration, the pace column. So let's highlight a few more rows. Now I have all the industries that are strongest or most accelerating. How many stocks we had earlier? 23. So from 40 to 23. Now let's reduce from the 23, only look at the stocks that are in these industries. I'm left with 11 stocks. Some of them are value, few of them are having high growth, and I can see 2 of them are having high earnings growth as well as they are undervalued, ET and APLE. What's more, using the scorecard, I instantly can see they are having pretty decent dividend yield, more so for ET 8.7%, but APLE is also having 5.8% dividend yield. Fund accumulation is very high on APLE. Insiders are bullish on both these stocks. Both went up on Friday. One is in oil and gas industry, energy sector, and the other one hotel and resorts rate, real estate. Remember, we saw 2 of the strongest sectors were in fact defensive sectors, utility and real estate. So I find one real estate stock here, and that is having very high dividend yield. So I'm combining all the insights using a few clicks. Let's look at APLE first. Actually, ET is also having very high dividend yield. So I'm going to look at both of them. Open their charts with a single click. Okay, close this one first. Or minimize. Minimize is also okay. I minimize the long all setup exploration result. Selected the chart application here, so that when I go back to QVital, click the chart icon, it will open the charts automatically. Let's look at them. APLE, bullish flow, possible flow long setup, broke out of a triangle pattern, broke out with above average volume. However, there are other trendline resistances nearby, so I'm not going to buy. Notice one thing though, if you step back, you may keep this pattern in mind. I have highlighted it many times. Jump thrust low, both of them magenta color, at pendulum low, and then came big move up 3. My hypothesis is this is not because of retail traders. Some big players bought, and as I have highlighted many times, almost all, and I always use this additional sentence that I hesitate to say always because it's a presentation on YouTube, but almost all the time, if you see jump thrust low at pendulum or price extreme low, then comes a big move up 3, almost always price recovers from there. So if you observe those signals and you observe that price recovered the watermark support, creating a false downside breakout. Then right on this day when we had bullish flow, not a flow long setup, because flow long setup is a trend following long setup, but we had a bullish flow. You can know that from the tick under the candle, you could buy at that time. And now it is trying to give bullish signals again. If it breaks out, if you are a breakout trader, you may buy that, or if it comes back to the trend line support and goes up from there, you could buy at the support as well, which in fact you could do on Thursday. Would I do that? In fact, no. When I look at all the signals, yes, the support is tempting to use for a long trade, but a trend line resistance was there. So Thursday I wouldn't look to buy. On Friday, it gapped up and it also cleared the trend line resistance. So on Friday, using intraday charts, you could look to buy. At the close on Friday, I would not buy because there are other trend line resistances. So that's fine. Close that. The other stock, ET. This is in an uptrend, higher high, higher low, came back to the yellow direction line, that is pullback condition, and went up. If this goes up next week, then that will give a buy setup. And I can see it also created a reversal candle on Friday. That's a bullish signal. Remember the wisdom in the market that if a stock pulls back, then it shows a doji-like candle. Interestingly, one day before that, we had bullish indecision at the bottom. The wisdom is after doji candle, if price goes up, trade in that direction. If it goes down, trade in the reverse direction. But after a pullback, I prefer to take a trade in the long direction. Those signals could have come on Friday. At the close, you could consider taking the trade. Again, my market view is indecisive, so I'm not actually going to buy, but this is how you would find trades in any market condition. Let's look at the scan result again. So I looked at some of the breakout candidates. Let's now switch to another category. Let's look at some headwind candidate. Is there any headwind candidate? There will be a one, yes, three of them. And when there are only three, I may simply open the charts first. If technically they are appealing, I may look at their fundamentals and industry score. Let's open these three charts. First one is OPCH. You can read the ticker symbol and the name from the top. OPCH came near the trend line support, precisely went up from there on Friday, and it displayed a bullish headwind. When it was coming down, it came down with bearish pressure. So you could consider this as a bounce long setup as well as a headwind long setup. There is a trend line resistance, however, that is some distance away relative to the risk in the trade. So it might be possible to take a long trade if my market view was bullish, which was not true as of Friday's close. But if market view was bullish, I wouldn't mind taking a trade, long trade in a stock like this. That is looking at the daily chart. Let's look at it using the weekly daily. That is even better because the weekly also has a very long term trend line support. these work very well. These supports work very well. So weekly, daily is giving even more confidence to buy. What about monthly, weekly, daily? Using a single click, I can look at that also. Even better. It turned out to be even better. Monthly is also having a trend line support. Daily is having a trend line support. Sorry, weekly, and here daily also having trend line support, and we have a bullish headwind. So it is giving a possible bounce as well as headwind long setup. And the other stock was, let's close all of them. Okay, let's go back to the scan result. The other two were COGT and CTLK. Open them. CTLK has a bullish headwind. However, the candle shape is indecisive and the trendline resistance is very close. It has not been broken. Now, if you look back into the chart, do you think I am more bullish than bearish in the stock? Remember the pattern that I described a while ago? Jump thrust low at pendulum low, then came a big move up 3. Almost always price tends to recover from there. We have a bullish headwind. If the trendline resistance is broken, I will not mind at all taking a long trade. Provided again, if my market view was bullish, that is not true. Why don't I look at it also using weekly, daily? Weekly didn't quite hit the trendline support. Now we can see weekly has a trendline support, daily also has a trendline support. So what would make me happier is to see price come to those supports and reverse from there. I expect very strong support from the trend lines because they are coming from far, far, far away. So if it comes to the support, creates a false downside breakout, I'm happy. But if it does not do that, but simply breaks above the trend line resistance now, then also I am able to buy because my stop will be very narrow. I could book some profit probably by the time price came to the next direction line. That is my technical view, but I like the other stock more. What was the other stock? That was OPCH. Let's look at the last stock, COGT. COGT also displayed a bullish headwind, but like the previous stock, it also has a trendline resistance nearby. So let's close that. I am left with one possible buy candidate, that is OPCH. Okay, now is the time to carry out its fundamental analysis. Fundamentals are in the middle, neither overvalued nor undervalued. Some earnings growth but not high. Some revenue growth. Those are last quarterly figures. There is no data on dividend yield. So fundamentally it is in the middle. On Friday it went up by 3%. Healthcare services stock, and I can see in itself 71% of 48 peer stocks went up. So in itself the industry was bullish. Let's see if the industry score was relatively bullish as well. I can check that out from Q Edge with a single click. First look at the graphical presentation. This is nice. The industry healthcare services relative score is gradually going up from 70 to 81 to 127. That's great. Alternate industry score, healthcare facilities and services also steadily going up. Both the industries went up by more than 1%. In fact, 1.5% on Friday. That's bullish for an industry. And if I look at the score, this is even better. Relative score, healthcare services, among top 20% of all industries by strength, among top 20% of all industries by acceleration. So we can see the industry was very weak earlier. Now among the top 20%, accelerating fast. That is a time to look for buy setups in this industry. OPCH could be one. I'm not going to carry out the full analysis, but see here OPCH fundamentals are not that great. We have 48 PR stocks. We could look at those PR stocks, try to find at least one star candidate, maybe 3-star candidates. Yes, some are there with 3-star as well, and maybe even diamond candidates. Yes, two of them. So if we did all that work, why don't we look at these two stocks, CCRN and AMN, both in the same healthcare services industry. Open them. We could look them up in Q Elite also, CCRN. Weekly backdrop is indecisive color. Daily is already up significantly from the recent swing low, so I'm not going to buy now. When could we buy? Last. That could be this day, Wednesday, when it displayed the bullish flow and also the possible flow long setup. It also came to the yellow direction line and went up, so it could have given a pullback setup probably on Tuesday itself. But as of Friday's close, I'm not going to buy CCRN, and the other stock was AMN. Both of them are very strong fundamentally, undervalued with earnings growth as well as revenue growth. But technically AMN is also not giving any trade setup inside a triangle. I needed to break out of the triangle pattern to consider it for buying. So I'm back to OPCH as one possible buy candidate. We could look at it using Q Elite's finder as well. It's giving a headwind long setup. Relative strength is bullish, that is outperforming the market, has a bull release signal also. That means it was oversold. Now bear stepped aside, went up by 3.1% on Friday. So that is how you are able to combine all the angles to find out a trade setup in any market condition. Once again, because my market view is not bullish, I'm not going to buy it. Just demonstrated how sometimes instead of using the finder, you could use the scan for all long setup or all short setup, or as I mentioned, if you are interested only in one kind of trade like breakout or trend following, you could use those individual scans as well. What is my preference? My preference is of course to use Finder, because then I can visualize the technical breadth and I can do multidimensional analysis. We are near 1 hour point. Let's end today's session here. Thanks a lot for joining. I look forward to seeing you in my next session. Should be on next Saturday or Sunday. Have a great weekend, and as these live examples show, as I always say, there is no reason not to do that. Trade profitably. Thank you.